Hello. Hello on this bloodbath of a day today. I'm CJ Kim, my colleague and co-host Matt Wilson. Welcome to Digging for Dollars. Matt, let's talk M&A.
Or the Jays. Let's congratulate the Blue Jays. World Series. I'm such a Jays fan, such a baseball fan. It's okay that the market is red. It's fine because I'm bleeding blue today. It's great. Doesn't matter.
Nice.
Nothing could bring me down. Even 7% corrections in gold. It's all right.
I think the pullbacks are always a little bit healthy as long as they're not prolonged.
You know, I have some fun facts for you based on this. I thought quickly. Do you know, so you and I started at the same time, right? 2009, 2010? Is that right? Both of us? So I looked at it. You know, the venture was basically at the exact same point. What year is it? 16 years ago as it is today. Same level, like 1,000, it's at 1,000.
And then we saw the spike, and I thought it was the greatest sector. I'm like, I chose right out of school, and then nuclear winter after that.
I know, but do you know what's even crazier? Gold is 40, what is it? $4,200, $4,300. Forget the correction today. It's corrected. Yeah, it's doubled in a year, right? So gold doubled in a year back then too. With 2009 to 11, it tripled. So in that double time, the venture goes from 600, whatever, to 1,000. And today we're going to talk about Canadian golds. And it's going through this research. When I built my first comp table, despite the fact that gold today is 4,200, the largest company in the world is 4 billion, not 4 trillion, not 400 billion. And the Dow is 4x. The same $50 per ounce or $100 per ounce multiple in Canadian gold was back then as it is today. Same thing. Keep your conviction.
We're in we're in stocks that are leveraged to gold. So obviously the swings are going to be exaggerated, but that's not going to stop, I foresee, the M&A activity. I think we're just going to see more of it, and we saw a fairly exciting one. We always knew that Northern Superior was positioned to be acquired by Iamgold. It was just a matter of when. And, you know, this week, on Monday, we finally saw the exit.
Congratulations to Victor and our friend and CEO Simone Marcotte and their head of exploration, Audrey, who's great. That was a big effort. That was 5 years ago. Royal Fox Gold and Northern Superior. Royal Fox was like 3 cents, 2 cents. They came in, put the two together, 30 cents, 205 sale, $375 million. Unbelievable work. But doesn't it beg the question, so it's kind of like a big player. I'm sticking with my sports analogies. It's like a big player signing, right? It's like the Ohtani contract. It's like, so it resets the market. This is not the Ohtani contract, but resets the market for players, for free agents, right? Because you say, all right, that player is this good, therefore it's worth this. So these guys, Northern Superior, a couple projects. Main one was 2 million ounces, gram and a half, give or take. Neighbor is Iamgold, right attached to it. $375 million. So for their main asset, that's $180 an ounce on an EV basis. So market cap minus cash in our junior space. That's what you want to use, enterprise value. Or their global resource of about 3.5 million ounces makes it a $101 per ounce takeover, which, like I said, is the same numbers that you would use for Quebec assets in 2010. So is this a good transaction? It sets it up. Like it's a great transaction for them because their neighbor was there. So is it better because there's one buyer, right? But it does say like that. I think the premium, their major asset is what they're paying for really here. So the 180, but what does that do for the rest of the space, right?
Well, transactional comps are obviously more of value than trying to put together some sort of intrinsic or getting the average of a peer group or whatnot. Transactional is what someone's willing to pay for an asset. I found it interesting that they didn't wait a little bit longer because normally with or like if you have a junior in the area, you wait for them to de-risk the project a little bit more. Any insights onto why they pulled the trigger so early? Was it a good relationship?
Why Iamgold pulled the trigger? I think, the same way that I just said that Northern Superior pulled the trigger, I think that the synergy of it makes a lot of sense because there's one buyer there, but if someone else comes in, then it just messes it up. I think that, you're getting Iamgold stock. Obviously, there's the arb that's happening, so Iamgold is down, and Northern Superior, there's the game's a little bit there, but not a lot. But you're playing the gold rush, right? So it seems like a really good transaction. All of management was in favor. I don't know it that well, but you're seeing this a lot. You're seeing these deals done. Let's look at Fuerte, right? Fuerte is another really good one. The coffee project, 3 million ounces. They raised all this money. Agnico, Lassonde, Trinity. We talked about it with the gym. It's $150 million pre-money for 3 million ounces. This amazing heap leach project, and it's in the Yukon, which of course comes with its things. But great asset, bought for $520 million in 2016. Right now, it's currently worth $350 million on the market with $40 million in cash with all these shareholders, right? And they have an unbelievable deck on all these EV per ounces and PNAV multiples and things like that. And it just seems like what's going on with Canadian gold here?
Do you think Iamgold acquired Northern Superior using development ounce valuation, or did Forte just get a steal of a deal on coffee? Because if you're looking at what they acquired that project on a per ounce basis, it was at a discount to what Iamgold acquired Northern Superior for.
Yeah, totally. And I mean, that is interesting. Maybe I think that they kind of stole that, but it wasn't doing anything, right? I mean, look at Discovery when they took Newmont's assets, right? There was, I think, $450 million purchase, and it's worth $2.5 billion now. Or what's the other ones? Musselwhite, or the Hemlo transaction, $1 billion of reserve life, just to see if it goes. These numbers are it's interesting. I just encourage everyone to kind of use these numbers when we talk about value in the space. Everyone do their work and go through it, but it's all right, so you have these actual tangible numbers right now that are in there, and all these big names coming into these deals, right? And you can go through the lists in Ontario and Quebec. I mean, Amex, $140 an ounce, Wallbridge, $30 an ounce, Westhaven in BC, $50 an ounce, smaller ones like Focus, Sirios, Cartier, Emperor, Maple, all under $40 an ounce. So Northern Superior is $100 an ounce baseline, up in Chibougamau, Couch Iamgold. Are all these things, is everything still just really cheap? Are we just so early in the transactional period? Are we back, does the venture double in 2.5 times from here? That's what I think. But it's so interesting, the space, that when I started going into this, seeing the analogs between now and back when you and I started, that the same dollar per ounce figure, the same numbers.
Is that necessarily a good thing? We're seeing the same dollar per ounce figure, but that was kind of the top before we went into the nuclear winter for the last.
Well, no, because I remember doing I remember Springpole, right? So I was looking at First Mining right now. So they have their two assets, 11 million ounces total combined, $40 an ounce. And now Springpole's, there's complications with the lake and Springpole, and there's complications with Duparquet and all these things. But, still, I remember doing my Springpole comp table, and that was, I think, $40 an ounce or something on 3 million ounces, 75 at some point. And it hadn't taken off yet. That was 2010. It was $2. And when it was ripping, I suppose everything was more. I think that, again, though, it was $200 an ounce to $150 an ounce. That was kind of there was no premium here. And what I'm saying is that there's a gap still. I'm saying all of these things are probably a buy. And I'm not trying to pat the gold bug on their back. It's just simply just a dollar to dollar figure. You're all right, so if the world's largest company was Exxon at $400 billion and now it's $4 trillion, Apple, Microsoft, NVIDIA, all these things, money is a different value now. So how can we be the exact same dollar value today that we were 15 years ago when gold is $4,200 and everything else is increased in value? So the companies seem like they're not worth enough right now relative to what their assets are saying. And that's why we keep harping on these PNAVs of, Amex, $2 billion project, Westhaven, $1 billion. What's his worth? $30 million. You're come on.
To simplify the comps then, do you remember what gold was trading at back then? I don't want to put you on the spot.
Yeah, about $1,000.
$1,000.
Yeah, it got up to 18. It got up to 1,800 in 2011, right? So it was 600 in 2006 just before we came in, and then 1,800 in 2011, and then it crashed back down.
Okay, so using very elementary math, should our comps be 4 times higher then?
Well, no, because you still have to adjust the cost curve, right? Because your costs have gone up, right? So I think maybe it's that in mining we're so burnt. And if you look at the Lassonde curve, and I hate to reference this all the time because everyone references it, but the whole point of the Lassonde curve is that you get this huge excitement at the beginning. Everyone stops caring while the 20 years of permitting and work goes on. And then right before cash flow, the stock goes up and then it goes crazy. And I mean, It's why I like Foran right now, right? It's like they're going to make so much. Look at Capstone and copper. They just rip from 50 cents to $3, right? To 50 cents to $10 as soon as they were producing. Maybe we're just, look at Cejay, right? Look at Iamgold. It's a great example. Iamgold almost went bankrupt building Cejay. And then as soon as it was built, it's amazing, right? But it was so expensive relative to what they thought. But gold was $2,000 then, not $4,200. So like, yes, the NAV would have been negative had they done it with proper cost then, but gold has adjusted. So I don't know what the answer to it is, but it is an interesting conundrum for us in the space, just because it just seems everything is still very, 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 very undervalued.
Yeah, very, very undervalued and very, very early still, regardless of what gold has been trading at, 4,200. And I personally don't see any sort of capital trickling into the sandbox, or a lot of capital trickling in. And are we still waiting for the generalist investor to come into our space?
That's what I'm saying, is that like there's just not enough capital still in the space, even though it's starting. You see it starting, right? But like the dollar, unless all of our numbers are totally wrong, right, in terms of like what cash flow will be, which I don't think that they are, but like if that was the case, maybe. But it just seems like you're buying something for 5 cents that's worth $1, using every financial metric you can think of right now. And it's almost like we were going through this exercise. I was going through Northern Superior. I was like, oh man, that's great. It's a great transaction. I love this transaction for both sides. It seems like really great. And I was like, yeah, $180 an ounce per their main thing. And they're right there. And that makes sense. I'm like, that's great, because it's kind of like there's one buyer in Iamgold. And then I started looking at all of the comps and I was like, wow, same thing. So I think that during these periods of pullback, sort of we're at full circle, right? During these red days, buy Canadian, but like I'm still there. I don't understand how this goes away. Everyone just gets so scared because we've been burned so much over the last 15 years, right? So I think that look at the precedents. Look at the 2000s, the run in 09 to look at this. Like I think that it still plays so well, and I mean, Blackwater and Artemis, and it's like $5 billion, and it's just such a shift. So maybe what we're just missing is capital in the space to make all these things a reality. To your point, like how you're only as good as your capital availability.
Mm-hmm. If there's such a huge disconnect in regards to something that's quantifiable in the ground, we're looking at companies, or we're talking about companies with an actual resource on the ground, and then you can kind of hinge a value on it. Why are we investing in exploration companies when at least we have some downside protection with these, assets that have a resource on them? Like, why don't we just invest in them if there's such a huge disconnect in valuation at this point? Why are we taking punts?
Well, I think that it's a great question. I go through it a lot. I think that you're still basing this all on risk reward. So if I can buy something for $5 million pre-money, that if it works, it's worth $2 billion, even, and that's risk adjusted to the space, right? And the chance of it working is 5%, and it will take 3 years with dilution. You can do the math, it still works. I think that it's all based on risk reward, right? So I still think that like anytime you look at a venture mining company, it better have a big target, to your point, because it probably isn't going to work. And if it does work, it probably isn't going to be worth enough anyway. And if it is worth enough anyway, you may as well just go buy the thing that already is worth something today and is still at a huge discount, like you just said, right? We just listed so many different things. You hear people come through our office like, we're going to find 1 million ounces. Like, okay, I just told you 1 million ounces on its own is $30 an ounce. Now, it could be 1 million ounces, 10 grams, totally different. But I think that it's all about the scale, right? Because you still have things like Southern Cross. Look, Southern Cross, $2 billion. Right? Newfound Gold, $1 billion. Right? Things do work, right? When they are special, when they are big, when you have context for something very large. And so I think that that's the key, right? Like, why do I love Amex so much? Well, it's because it's different. It's unique in the space. So I think that when we approach these names for things that we're doing, it's all about making sure that the reward is worth the risk. And the risk is also market dependent. It's dependent on, the commodity fluctuations. It's dependent on capital allocation. So it better be a project that has scale and and grade. And if it doesn't have grade, it better have some crazy scale, right?
So the metrics that you pointed out before, Matt, they're not all like, obviously you should not hinge a total, like your investment on it. It could be a good starting point. It could be a part of your research, but it is a very important metric to look at now, especially since we're going to see more and more transactions. And what you said, it kind of resets the landscape and you know what to.
Yeah, don't think something is going to be worth $1 billion at a gram with 3 million ounces, because it's not. We just now know, right? And yes, I think Forte, I think that coffee project was stolen, but it was because of capital allocation, because now there's capital there, right? So now but use that, right? So it's like if I'm going for something in the Yukon, I'm going for 3 million ounces. Well, it makes sense, right? Now that is a hard one, right? Because we're going to talk about different ones in the Yukon. That's a hard one, Forte, because I think that's a huge steal. So I think that's a bad comp. I don't think that's a good one. But I think Northern Superior is a good one in Quebec, right? And I think that look at the comps. Is it different, right? Like, is it advanced? How big is it going to get? I think that just it is. It's also the possibility, though, that everything is a buy, right? That's what happened when we started in 2009. That's why it looked like it was so easy, our job, right? Just buy everything, and everything went up. And so everyone's like, oh, you can do whatever and everything will go up. It's like, yeah, because everything is still really undervalued. So there's also that piece to it, right? Which is like, well, if everything is undervalued, you're probably going to be right, which is what happened when we started.
We were all so smart and also geniuses, and it was so easy.
Genius darts at the dartboard. It was great. It was awesome.
Okay, so speaking of the Yukon, our guest today is David Donofrio. He has over a decade of experience in the mining space. He's currently the CEO of White Gold. He was an executive at the Power One Group, where he cut his teeth and developed a depth of knowledge in advising companies, raising money, advising mergers and acquisitions, and even managing their businesses. David from back in the day, so I imagine you'll have a lot of stories to tell. David, thanks for being on the show today.
Dave, what's happening?
The Blue Jays.
Yes.
That's what's happening.
You were there last night. I sang I Bleed Blue.
I know I thought of you, a big baseball guy. Fortunate to get invited, and you couldn't ask for a better game.
Oh, man. How was it with that Springer home run? It just was like...
There was a lot of energy in the air all day, and then you could sort of see the panic, and then a little bit of despair, and then bang. That I think has got to go down in one of the greatest plays of Blue Jays history, anyways. So it was a lot of fun.
For sure. I was so amped. I was like, oh man, the venture's up, the Jays are winning, all these good things are happening in 1 year, and then we have this giant correction day here. So are you selling everything? Are you out of this? Are we done?
It can't be too good all the time. I don't think so. Like we're early days. Like, I live in the juniors world. I think we just started to wake up 4, maybe 6 months ago, and if this is going to be a cycle, I don't think it's going to be a 6-month cycle. So I think we got years to go.
Dave, you and I met a long time ago. Hilariously, one of our first interactions together was on a tech company, but we don't have to talk about that one.
There'll be a book written about that one.
There's a book written about that one day. Why don't you started what, 2000, you're counting before that, but 2010, 2011, is that when you?
Yeah, more or less. So I'm a CA by background. I worked at Deloitte for a long time, and I knew Pat DeCapo from university and some common friends, and kind of watch what those guys did in the early 2000s as the venture, junior mining scene was really picking up, and try to stay as close to them as I could, and started doing little things, couple directorships here or there. And as Pat grew and Power One grew, eventually he gave me the call in 2009 and said, what do you think? You want to come give this a try? I said, yeah, let's give it a shot. And here we are.
Yeah. So you joined when we joined. You're like, this is the greatest idea in the world.
Yeah,
and then nuclear winter for
10 years. Or more,
but now's our time. Yeah.
6 cents to $6 was like nothing.
Yeah.
That's what I was saying. We were talking about this before, Dave, is that it was so interesting. We were starting to do we're talking about Canadian golds and how everything looks really cheap. And we'll get into white gold in a second. But one of the big things is that I was looking at the venture, and the venture was almost the exact same level it is today, the venture index, as it was when I started in 2009. And the Dow is 4x. The largest company in the world is 10x. Gold is 4.5x. And here we are stuck at $50 an ounce still for all these people in the Canadian space when gold, Canadian costs, you have $140 US dollar, right? So what is it? What is it about? Is it that everyone's been burnt? Is that like when you go around with white gold, you talk to people, is it generalist investor money? Like what is it in the space that's holding back this index from just tracking the rest of the world in money?
Yeah, I think there's maybe two things. I think way back when we started, like that 1,000 where we are now was kind of on the way down, and then we had this like crazy long bottom. But I think like if you ask like why are we today if north of $4,000 gold and the venture hasn't woke up yet, I think a big part of that is just the cyclicality of these gold cycles, right? It takes time for the capital to come down cap, right? Like you could have bought Agnico a year and a half ago at $60 and there was a good shot it would double, and it did, and triple. So I think that is the way these cycles work. It goes from the big guys to the mid caps to the producers or the developers, and then these exceptional new discoveries like a Collective Mining or a Snowline, and then eventually it'll move down to the smaller ones with good assets and good places, and then eventually to the
moose pasture,
right?
and
Which we're not at yet, and that's good. And to your first point, like where are we in all this? I think we're sort of just starting to see it move to this the bigger of the small caps, I would say, which is. There's a lot of value, and you kind of hit on my point. I tell these people a lot. Where are we? You're paying $50 an ounce in the ground, maybe with gold $4,000, and whether it stays there or goes higher or lower. I think when you look at these companies, you want to maybe look at a lower case scenario, but I think there's also good arguments that gold could stay here. So I think it's just a matter of time. And that's kind of my perspective, among some other criteria, which I'm sure we'll get into.
Right. I guess the GDX has doubled since then. So the GDX has moved. So it's not the venture. So I guess that's too broad-based an index. So the GDX has doubled, but it has not stayed with the Forex. But that's a good point. So it's just coming down cap. That's what you're saying. You're like, okay, well, the seniors have moved. I mean, like Nico's crushing. And then that will get there at some point. And we're just early in the cycle.
That's not the only thing. Like, to be realistic, there is other competitive outlets for speculation now, right? When we were getting into the scene, there wasn't Bitcoin, right? There wasn't online gambling or how easily accessible it is. And for a lot of people and retail type investors, part of it is just that's there's speculative outlets, and that's great. And so there's other competition, which is fine. But it's also, I think the other thing that's very different from sort of the early 2000s, that was on the back of a major crash on everything else, especially the tech. So there was a big sector rotation, which we have not seen yet either, because kind of everything is on the way up. So
does that open it up for even more risk though, because everything's correlated on the way down, but not so much on the way up?
No, I think it's the opposite. I think people, especially the generalists, will need an excuse to really rotate. And why would someone else look to a different sector if what they're doing is working? So, even Eric Sprott, and I didn't know this until I was at this Hall of Fame induction dinner last year, or 2 years ago, whenever it was, he was not always a gold guy. He was a generalist and a big tech guy, and it wasn't until the late 90s where he said, you know what, this is looking a little toppy here. Let me go find something else. And
I think most of those guys, I know Sheldon built all his wealth in biotech, right? Before he went into junior mining. That was a cycle, not the same thing. But I know that was a big thing in that rotation from the late 90s into 2000s, right?
Actually, funny story. So Pat DeCapo, Power One, our first CPC was called Bio One, and then it went into become Aurelian Resources, which made the Fruta del Norte discovery, which is now Lundin Gold and $20+ billion
worth $25 billion and cash flowing however much money.
It feels like Aurelian really seeded a lot of the big investors today.
Absolutely.
And before that, it was Paladin Energy.
Right.
Like you have kind of the different generations of big investors.
Gold Eagle too. Gold Eagle was a big one, right? That was a huge one. All those guys piled in and had so much belief in it, right? That one worked.
So that's another thing. We haven't seen a ton of M&A yet.
Yeah, and M&A is normally an indication that we are on the bottom or on the mends because we're in a business with the resource is finite. It's not like, I don't know, look at tech and SaaS where the cash flow generated is almost given that it's in perpetuity or 10, 20 years out. Like we're getting what's the multiple right now on an earnings?
But do you feel like M&A is a sign of a bottom or a top?
Bottom for sure.
Oh,
I think it depends what kind of M&A. I think when you start seeing the big guys merging, like we saw the last couple of years, that's the bottom sign. And then as the M&A starts moving to the developers, and then we start to see it moving to like the non-cash flowing asset, like we saw with Northern Superior yesterday, that might be more sort of into the cycle. But I think also the M&A drives a lot of the FOMO from the investment community, and we haven't really seen that yet.
well, I remember that was like Trelawney, Redback. Remember Redback transaction in 2011? Like that was $7 billion. Just throwing money around because everyone was cash flowing. I feel like that was more toppy than it was.
Right. We're definitely not there. I think the big guys are definitely behaving themselves for the most part, which, there is still a lot of grief over transactions like Redback. But at some point, like they're making so much money, their equity is so valuable, it would be prudent to start to use that as a currency. And the other problem, like to your point, there's only a finite number of projects out there that are real targets. Because and asking where we are in the cycle, one of the big things I think that's going to drive value appreciation, and we've seen this, there's been such a dearth of real exploration in the last decade. So there has not been many. I think the number of new discoveries in the last decade is like maybe 20% of what it was a decade before that. And these producers need product, right? And they're going to have to go get it, and they haven't been doing the exploration themselves. So we haven't seen that yet at all, in my view.
So tying into your project right now, we talk about it a lot, this Fuerte, the coffee project, so close to you guys. We'll tie it into white gold, which I think is such a fun story. So what, it spun out, this asset that got bought by Goldcorp for $520 million in 2016, 15, whatever year it was, and gets spun out for $150 million, gets $50 million from Pierre Lassonde and Trinity, and Agnico's there. It's currently worth $300 million. And I don't even know what that feasibility would be like. It's probably unbelievable. And so what's you guys have 3 million ounces, 1.5 grams. What do you feel about that transaction and how it kind of applies to the Yukon in general? Like, we talked about the Northern Superior transaction, resets Quebec and stuff. What happens in the Yukon here?
Yeah, I think a few things happen. So the Yukon, geologically, I don't think anyone will argue it's, top-notch prospectivity. Like even when we had this Yukon mini conference up in July, and talking to Quentin Henning was up there, and he was congratulating him on Snowline and how well that's doing. And I said, Quentin, anything else you like up here? Yeah, everything. He's like, this is like West Africa to me in the early 2000s. Wow. It just has such a prolific prospectivity, and the work hasn't been done. So you've seen Alaska, the work's done, tremendous results. BC, the work's done, tremendous result. Yukon's been sort of overlooked for different reasons, and speaking to a lot of guys, I think it's about 20 years behind Ontario, Quebec, and then so gold market's picking up. People are starting to look to these earlier stage opportunities, but last summer there was the issue with Victoria Gold, and I think that put a dark cloud over it for another year. So it's about a year behind, I think, generally in this cycle. Although a lot of that's changed, a company like Snowline having these terrific results, bought a lot of new eyeballs back. The rate of discovery, I think, is exceeding most places just because the work had not been done historically. And now you're starting to see more and more majors moving in different capacities. B2's in there. Agnico's been our partner since day one. Newmont is there. Now, and this is the interesting thing I find about this coffee transaction. A lot of people are scratching their heads, myself included. Like, it doesn't seem like it's a big number, right? This is a good, like you said, it's a really, really good project. Like it's one of the highest grade heap leaches out there. But when you look at how it got structured, Newmont staying in as the largest shareholder. I think they're just under 30%. Agnico's coming as a shareholder. Pierre Lassonde's coming as a shareholder. The guys from Trinity are coming in as shareholders. Like, these are some of the best mining merchant bankers and mine builders in the world. And I think their return is going to be on the back end with the equity.
It's like the DOD taking equity in LAT. In Lithium Americas. No, not really. No, this is...
Which was another early
I know.
Power One deal. That was one of my first...
My copper company is actually Lithium Americas. Sterling is actually Latin American Minerals, which is Lithium Americas.
Oh, was it?
I swear. Same company.
which we tied up the original assets in because they didn't have an Argentinian subsidiary.
My incorporated, that's right. That's why we had Paraguay. So my incorporation dates back to 2003 because I'm pretty sure Pat made the company. Small world, man. Okay, so White Gold, tell us what's going
Which,
on.
congratulations, by the way. Sterling is like amazing success.
Thank you very much. It's been a good one for now.
We made a deal not to talk about Sterling because
did you?
no, just between me and Matt,
okay,
because
sorry.
the last 4 episodes
we
we were
talked
bound in
about
the drum, but it was so.
I'm just an objective.
I don't know,
bystander
so we
cheerleader for
appreciate
good
that.
guys in the business
We're
with
gonna
good
wonder
projects.
how
Okay.
we're gonna throw Sterling into this, and like,
there
thank
you
you
go.
for doing that. Yeah. So with or without, I guess, the coffee transaction, White Gold was on its own trajectory of its own. So I imagine, like, it's awesome that now you have a lot more excitement as your neighbor, but moving forward, I guess it's still business as usual for you guys.
So White Gold got even more forgotten than the rest of the Yukon, which is it came out of a good reason. Like so that, the last several years we talked about it, it's been a down market, and a lot of juniors didn't even bother doing any work. Like, why? You drill, you get good results, you're not rewarded, just brings on selling. But we really did want to stay active with the idea and the goal that when this cycle turns, we want to have a story to tell. And some really smart minds in the business kind of advised us on that. We said, okay, that's a good idea. So we were able to, we financed enough each year to be able to do a pretty good sized program that was small but could be very impactful. But those financings were just generally done between Agnico and ourselves. So the street wasn't really involved. We had no research covered, no trading, no anything, and we were just forgotten. And so down in Beaver Creek, like, my best takeaway, other than the fact that people seem to be caring about junior mining again, was A, the Yukon's en vogue again, but B, nobody was aware of what was happening with White Gold. So once they get the update, they're like, oh my God, this is 3 million ounces. Oh wow, this is the highest grade deposit in the Yukon. Oh wow, you have this like high grade core that's 3 grams, and then within that's 1.2 million ounces, and you have 700,000 ounces at 5 grams that are sitting right at the pit. Like, this is really interesting. And I think that's when you start to see this price appreciation. But a lot of it's just been catch up. I think we're still trading at about, maybe a 50% discount to the pack in the Yukon. But now we're out there. We're telling the story. We've been fortunate to be able to finance just recently. So we raised 23 million, and that's going to fund a huge program, which is something we haven't ever done.
Yeah.
And that's going to be led, and this is another big change, I think, to the story in White Gold. We were able to get a new VPX, Dylan Langell, and he was part of the Great Bear discovery team. He was a young guy in the team at the beginning, but he was there from literally day one. He was actually, his story is he was in the core shack, logged the discovery hole, and spent the next 5 years with Great Bear, the next 2 years with Kinross, just drilling that out, running 13 rigs. And then it got to the point where it's time for that to go into production. He said, listen, I love this exploration side of the business, and let me go find something else. And we were fortunate to have a friend in common, and he saw our story and wanted to come, which to me, like, a guy like that could win anywhere in the world. So, him coming to White Gold meant a lot. And he's also repositioned the story. At the same time, really uncovered a lot of value opportunity that wasn't really properly understood, admittedly by like ourselves as well, which we can touch on.
Some people might argue that it was because it was Ryan Gold before White Gold. No, Ryan Gold.
So Ryan Gold was different. Ryan Gold came on the heels of all these discoveries in what's known as the Klondike White Gold District, which is everything south of Dawson, which goes south to about the Coffee, Western Copper's there. Mm-hmm. Ryan Gold was another package that Sean Ryan had, but it was everything north of Dawson.
Mm-hmm. But Sean Ryan is still co-founder.
Oh yeah, no. So Sean's our full partner, and so that's actually split up into a few different companies now. They've had some success. I think I can't remember if it's Sitka's project was one of those, or there's been some good results. It's just that got broken up over time. Yeah. But what Sean did, which was so interesting to us, is he compiled an enormous land package of everything basically south of Dawson that he used these novel soil sampling protocols to identify mineralized systems, and put it into one company, which is White Gold. And everything's in there other than Coffee, which had its own success as part of Kaminak and got acquired by Gold.
Because I remember when I first started, that's when I thought this industry was I lucked out. I picked the right sector. Yeah. My colleague was in Ryan Gold. He bought like a $10,000 gaming laptop, and I'm like, what's going on? He was 17 years old. Yeah. And
no, it was hot. Like that was, what was it, 2011 or So that was a top for this market for sure. But actually, here's another. My takeaway is well, the nice thing about getting old, one of the nice things about getting older here is you see these cyclicalities. Not a lot changes in this industry, unlike tech or pharma or wherever else. This knowledge base that we've developed over the last years keeps relevant, and you know where the projects are, and it's as the commodities cycle changes, as the world changes, and they need different things. You can kind of go back and bring them, to the market. And one nice thing, and like part of our strategy at Power One, when we have a good asset. We're private. We will sit on it and preserve the capital structure, keep it alive, try to build value in the meantime. So if and when the market comes back, you're there. And we've seen that now in the uranium cycle, for example, sector. Like Matt, you guys did tons of uranium as well, right? Well, we just owned them all. Like Encore, right? Just Bill Sheriff, we just owned it. And now people say, oh, wow, you have these great uranium investments. You're so smart. I said, well, we're patient. It paid off, but, that's part of this business, just staying.
Or hydrogen.
Hydrogen, yeah, all of them.
The commodities it hurts so much when you're in a lull, but it's one of those sectors that nothing's going to change with it structurally. Commodities are always going to be there, and it's always going to be cyclical.
You're right.
So if you're patient enough and I guess solvent enough, and you can hold on.
It's not easy, right, exactly. And and listen, there's so many different factors. Like it goes through eras where mining's just not cool, right? And then now you're like, oh, well, AI's cool. Like, okay, well, where are you going to power it? What do you need? You need copper. You need energy. Like you need silver. You need gold. You need all these things. So
the turbocharged ESG lull was kind of weird to go through. Yeah, that was a hard battle.
And then now we're living in an era where commodities are politicized and weaponized. Like this, to me, we have the perfect storm brewing here, like with everything that's going around the world. Now, hopefully nothing worse happens, but in terms of like Canada and guys in our business, like that know where, these opportunities are, you couldn't ask for a better situation.
Okay, so let's see if this translates into good picks. The dealio, dig this deal.
Okay.
We are each going to pitch a stock. It's going to remain anonymous. The only thing that we have to mention is the market cap. We only have 30 seconds to a minute to pitch it, and the other two will decide if they dig it or they ditch it or requires more digging.
Okay.
So who wants to go first? Matt, why don't you go first? You're always the last one.
All right. I am admittedly very underprepared for this one. I forgot to do this. I was just so excited to talk to you and learn about what was going on. We are happy shareholders of White Gold, by the way, given the fact that I actually also did not remember what was going on, and then you told me that you had 3 million ounces of gold. That's what time we have 3 million ounces of gold.
And I think if Dylan's right, like it's going to get a lot bigger, and especially this high-grade core, watch out. So we got lots of news coming, fingers crossed, and this will be the exciting times ahead.
All right, well, in the general consensus of gold matters and the venture is undervalued, I went with something a little bit different here. All right, I am in Quebec. Okay, ready? So here we go. I'm in Quebec. I'm a $25 million market cap, probably 25 now today, red day. $25 million market cap in Quebec, 15 kilometers from the Éléonore mine. I have 2.5 million ounces at over a gram, split between indicated and inferred, about 50-50. It's a pit. There's expansion potential at depth. It's been around for a long time, though. But, again, 2.5 million ounces, over a gram, 15 kilometers from Éléonore, 25 million cap, 2.5 million in cash. Dig or ditch?
Any metallurgical issues?
No, 92% recovery. Great question.
So it's one of those projects in Quebec that have been through many, many cycles.
You'll even know the name.
Yeah. It's like one of those reluctant dig it's because I have high conviction in our sector right now. And maybe if I had a little bit of dough, I'll be like, okay, why not? We've been in this before. It's probably going to go up. But it's a boring dig.
Yeah. I dig it. I'm really liking these assets that are known. Like people don't, either they're not part of it or they forget how hard it is to go delineate 2.5 million ounces. That takes you a decade. It probably takes you a couple $100 million, and you have to beat the odds, right? Like I think Accenture put out an article I read a couple of weekends ago. Your odds of actually making discovery of substance is like 1 in 1,000. So companies that have this, like the White Gold or this, it's like, yeah, that's almost impossible.
Yeah.
So unless there's something crazy wrong, and people, human nature, they're bored. Oh, that's old. They forgot. But to me, I'm like, you know what? That's the opportunity. And Quebec's an amazing place. Obviously.
Now, South James Bay. I forgot to say that. Company name is, you'll know, Sirios Resources. Sirios been around. I looked at it. I couldn't believe it. 2.5. I'm with you. 2.5 million ounces. I was like, what? Dude, it's so hard to find 2.5 million ounces. And that was the Northern Superior case when it merged with Royal Fox and they put it together. And then all of a sudden it's $400 million. So
Eleanor's another weird one. It was bought by a UK-based company. It's private.
Right.
And then they're just holding on to it now. Probably smart considering these markets, and then flip it out. There's good consolidation potential.
2 people digging my deal. I think that's the first time ever.
When I looked at it, I didn't even know who it was.
That's the other thing. Like our issue, it's all about like capital, right?
Yeah.
There's been no capital. Now we're seeing more capital, and we're seeing different pockets of capital. Like, is this private equity? Like, people are like, oh, Snowline's $2.5 billion. That's who's going to buy it? It's so big. But is that a big number if you're in some U.S. like fund that wants to just?
Or Dave, if you've been in oil for a while, I was trying to explain to someone who's just new to the space about oil, the difference between oil and mining. I was like, well, people in oil have way more money. And when you say $1 billion to them, they're like, sure, here, let me write you a check. Because they're like, sure.
$1 billion gets you the best asset in our mining space.
Right,
Like,
exactly.
it's
Canadian,
like,
right?
yeah.
Like, or Tether, or who knows? Like, there's all these new.
Oh yeah,
pockets
that Tether. I wonder, they have enough to.
Yeah.
Well, when you have Apple's cash reserves can literally buy up our entire sector.
Yeah. Someone's they should buy the venture index.
We have very, very small. Okay.
Hostile takeover every single company.
All right, Dave, why don't you go ahead?
Okay, I'll give you mine. I'm not going to say where it is just at the beginning because then you'll probably guess it because it's not a big place. But it's in Canada. It's in a great place. It's a 50 million market cap. It's got 1.5 million ounces. It's a past producer. It's still permitted. If you take the 1.5 million ounces plus the 700,000 ounces that was produced, it's actually the largest discovery ever in this area. It's 1 million of those ounces are open pit at like 2.25 grams or something, and the 500,000 ounces are underground at a little over 2.5 grams per ton. Lots of exploration upside and some like really great shareholders, including Eric Sprott, Mike Gentile, and of course ourselves promoting our book shamelessly here.
Dig.
I feel like I have to dig it.
I don't know how I could possibly ditch that. What's the story?
Yeah. So it's in Newfoundland, Big Ridge Resources.
Big Ridge.
Yeah.
Yes, I have heard of Big Ridge.
Good one. That's cool. I didn't know any of those things.
Yeah, no, listen, it's run by Mike Bandrowski, very smart guy, geo ex-analyst on the street. And I think his story now, and I've been talking to him, like, get the story out there. That's a big part of it, just build the awareness.
Where is it in Newfoundland?
It's right on sort of like the southwestern.
So kind of in the tough to touch to reach spot there.
No, it's right on Tidewater. They have a port, they have power, they have a landing strip, they have a 40-person camp. And what's nice, Newfoundland, like they have all these mills. So you guys were talking about developers on one of your podcasts not too long ago. You can toll mill it to one of these ones, hopefully. So it's quasi, it's either exploration, it's a developer, or it's both.
Big Ridge, cool. Definitely dig into as well. That's great. Good one. That is a fun one.
All right. I'm not going to say where my project is because I think it gives it away as well. Pretty small, but get ready for this one. All right. 67 million market cap company, fully owned near surface gold deposit with very compelling economics. They recently redid their PEA in April. So at $2,900 gold, they have an MPV5 of 650 million US now, an IRR of 46%, very modest capex at 215. So the mine is just based on the core deposit, open pit, around 1.2 million ounces, but there is significant exploration upside in that they have 4 other satellite zones with exactly the same mineralization. So near surface gold, similar grades, and similar geology. And none of these resources or none of these zones are part of the PEA. And they're all within trucking distance of the proposed processing facility. Can you say feeder zone? There's potential feeder zone here, guys. So I'm not sure if you ever heard that, but it's a really, really big upside here. Historical workings have mined visible quartz veins grading 10 to 30 grams per ton. So confirming that the open pit shell can be part of a oxidized cap of a much larger structurally controlled system. And there's a little bit of crossover here with the companies that we spoke about on the board. The executive chair is Paul Matisek. So, he sold 6 companies worth over $2.3 billion. Simone who just sold Northern Superior, and we also have Victor Cantori on the board. So it's basically the Avengers have assembled for this development story.
Take my money. You got it. I'm in.
I just talked to you about this deal. I'll dig it. We talked about this.
I don't want
literally 1 hour ago.
a pity dig. Give me one with more conviction. That was I don't want your dig anymore. I want Dave's dig.
No, I dig it. I dig it. It's the same
Yeah.
theme we're talking about.
Yeah.
Good assets and like you have lots of growth potential, right?
Yeah.
That's another thing that's important. And look at you want to look at the land mass and it's these hints, right? Like
Yeah.
so. That's I dig it.
So that's Freeman Gold.
Okay.
They're a Lemhi project in Idaho.
Nice.
All
America's
right.
a good place to be.
Good names, guys. That was fun. Those are good ones. Dave, that was awesome, man. Congrats on the financing, all the success in White Gold. Can't wait to see how this grows. So much excitement coming.
There's a few other things. And what's nice is with the Fuerte you touched on, that builds the road, right? So White Gold is not you're investing in a potential mine, you're investing in a potential camp, which is the other big thing that got us
Would
so
you
excited.
sell your company before a PEA like Northern Superior did? If someone came to the door and it's like, I'm going to give you...
Listen, everything depends on the right price.
Yeah.
But the one good thing about White Gold, it's not built to sell the company necessarily. Like we're looking to sell it a project at a time. So
Yeah.
I think that's the possibility that could happen. Or looking at how things are setting up, maybe Agnico and Newmont, they tucked the golden saddle and the coffee together, and then I think we've sort of cracked the code now on what worked to make those discoveries, and just look to replicate that everywhere else. And they're building the road, and it's like we own this huge farmland, and someone was putting a subway right through it, and we can build all these condos.
Or maybe they come in before... Like they
we're
wanna,
doing a PA now,
yeah,
and I
yeah.
think based on what we see with this grade and coming to surface, I think it's going to be pretty exceptional.
So when's the PEA coming
It's
out?
going to be sometime in the first half of next year.
Okay, so that's a pretty exciting milestone to
I
look
think
at.
I think that's going to be the real eye opener.
Yeah, and drilling in between.
Yeah, exactly. No, we've been drilling now, and we got a crazy big program lined up. That now that we got this, we've never actually had a program this big. So what we've done in the last few years is looking for new satellite deposits nearby because we have these modest budgets.
Yeah.
But now with a real budget here, we're going to extend this high grade zone. We're going to follow up on these new discoveries. We have tons of new targets, and that's all within this 15 kilometers of the main zone. And then we have 19 other projects. Most of them are gold, some of them are copper, tungsten, bismuth, some of these critical minerals, which we're actually in the process of isolating those, and we're going to spin them out to the shareholders. I think if we're not getting enough value in our gold, we're getting zero for that. So that's an easy way to build some value for the shareholders and put a new team on it. And we got the casino project right beside us. That's one of the largest undeveloped copper gold porphyries in the country, and these things are bordering it. So there's a lot of reason to be excited for those, I think, too.
All right. A lot of, what you said, a lot of reasons to be excited, a lot of catalysts on the horizon. Thank you for making time for us. That was a really fun episode.
No, this is awesome. My first podcast, so thank you very much, Matt. Always great to see you.
Thanks, buddy. That was
Best
great.
luck to your Blue Jays.
So it's just confirmation that there's no real way to value, no right way to invest, but there's a lot of value.
That was a good episode. I like that conversation. I learned a lot from David there. That was great.
He's gone through the trenches.
Buy
with us.
Canadian. Seems to be that's the motto. Buy Canadian. The just giant disconnect, and everyone I talk to seems to have different stories right now. He brought it up. It was a point that I thought of was different stories of capital coming in the space, like new capital, like new sources of capital. And you go on all these investment meetings and you see all these things, and you hear about different people, and it is interesting all this money that's been made over the last 15 years in any space but mining. At some point, we'll have to find things to make money in, right? So,
as an issuer, how do you find these pockets of capital?
they find you if you have good quality assets, and honestly, if you have to diversify, the people and diversification of like the people you deal with, right? Like I think that the struggle in our space is sometimes the same method of raising capital over and over and over, and the insecurities we have, like the same mining conferences and the same people over and over, and we don't kind of go try other things, right? Go talk to other people, and it's amazing to see like oil companies care and like Dave said, private equity guys, and it's not a big check, right? Like these aren't big checks that people have to write in relative to what they're used to.
Yeah. Okay. All right. I'll see you next week.
See you next week.
Okay. Bye-bye.